Hedge funds raked in more money than ever in February. Barclays, Hedge, and TrimTabs Investment Research reporting today that hedge funds hauled in a record $34.9 billion in February, marking the 7th consecutive month of increasing inflows. Well, joining us right now with more on that report, Charles Biderman. He is the CEO of TrimTabs. Charles, good to have you back with Matt and myself. So this is a lot of money that's flowing into hedge funds, isn't it?
Yes, it is. It's the most we've seen in quite some time. And it's not particularly a good sign. In the past, whenever there was a huge inflow, the market sold off subsequently. So it's sort of a contrary indicator.
Let's talk about why, first of all. I mean, it's following or chasing performance, isn't it, this amount of money? It's 2%, by the way, of total hedge fund assets.
Well, typically February is the biggest month for inflows, and this February it seems to be pension funds allocating an increasing proportion of cash to hedge funds in order to outperform bonds, I guess. So we're not exactly sure where the money came from hedge funds, but hedge funds are the biggest source of the new funds.
Does it continue in your view based on the flows that you're seeing?
No, typically, as I said, February is the biggest, like year-end allocations and decisions. They decide in January, and the money seems to flow in February. So February historically is the big month for inflows.
So why I mean, your research points out that hedge funds typically do well when inflows are high. We're looking at the highest inflows in a couple of years here. Why do hedge funds do poorly when inflows are so big?
Well, the market's done quite well for a number of months since last August when Mr. Bernanke announced the Fed's going to subsidize the equity market. The market's taken off, and now hedge funds pension funds are deciding they want to get on board, and it looks to us as if it might be a little late in the game, but given that the QE2 is going to end in a couple of months.
So this is just about chasing returns in your view?
Yes.
What conclusion, because Charles, you follow this, you follow a lot of market statistics. I mean, what conclusion should we make about the impact that this could potentially have on the markets going forward, or what it says about the market specifically going forward?
Well, the only source of new funds that we've been able to find for the last 2 years has been coming from the Federal Reserve. If they stop putting new money into the market in June, or making money available by creating this huge bubble of liquidity, we're not sure where the new money is going to come from to take stock prices higher. To me, this looks like a game of musical chairs, and the Fed's playing the Victrola. And at some point, when the music stops, I don't think there are enough chairs for everybody to safely exit the game.
What about the question of where this money goes? We're talking about 2% of hedge fund assets added $35 billion. You keep flashing the numbers there at the bottom of the screen, but it's a big number. I mean, it's almost as much as the cuts to the budget for 2011. So where does it go? Do we see commodity prices go higher? Does it go into the equities market? What do you think?
Well, one, I think it's pretty much invested. A quarter of it went into commodity funds, and a quarter went into fund of funds. That's the biggest money going into fund of funds. So it could also be that with oil prices going up, whenever oil prices go up, there seems to be bigger inflows into fund of funds. And the suspicion is that fund of funds are where sovereign wealth entities invest through. They put their money into a fund of funds, which then puts the money into a hedge fund to create a buffer. They don't really want people to know whose money it is.
All secret. All right. Hey, Charles, we appreciate it. Thanks very much. Charles Biderman there, the CEO of TrimTabs Investment Research.